Welcome to RelyLocal Frederick Business Radio Spotlight. For the next 30 minutes, you will hear fast-paced interviews, unique perspectives, and valuable insight from real people who believe that empowering local business is everybody's business. This show is about the backbone of America, small businesses right here in and around the communities where we live, work, and play. And now, your host, Caressa Flannery, brings you RelyLocal Frederick's Business Radio Spotlight.
Well, hello. This is Caressa Flannery with the RelyLocal Business Spotlight. And you're probably wondering, what is RelyLocal? Well, RelyLocal is actually a grassroots campaign to help support local businesses in the Frederick community. A healthy community depends on a healthy economy, and both completely depend on the local businesses in Frederick. Simply put, more money spent with local businesses stays here, about 68%, where much less money spent with national chains stay in the area, only about 14%. And then, of course, money spent online, well, that simply leaves us forever. Now, it's not to say that you shouldn't be spending money in the national chains or online, but you want to also make sure that you are supporting your local businesses, because they do have products and services that are right here in your local community that you can use every day. To us at RelyLocal, supporting local businesses doesn't stop with the economy. It is all about creating a stable and vibrant community. Frederick businesses create jobs, tax revenue for schools and parks and roads, while offering diversity in the marketplace with unique products and services that are not found in those big box stores or the chain restaurants. Not to mention, these local businesses are owned by the very people who sponsor our Little Leagues, donate to our local charities, and volunteer for our community events. They give back to the community in countless ways. You rely on them, but can they rely on you? Now, we are here today talking with Mark Ebinger, and Mark is actually the new representative here in the Frederick area for MNET Mortgage Corporation, and MNET Mortgage Corporation in Maryland. And Mark, welcome to the RelyLocal Business Spotlight.
Thanks for having me, Caressa.
We are really glad to have you. And actually, I wanted to start off by, getting people to letting people know who Mark Ebinger is, and letting them know how you got your start as a mortgage lender here in the community.
It's kind of funny that you asked that question. I relocated to Maryland back in 1987 from Rhode Island, where I went to college, and I spent about 4 or 5 years in the consumer finance industry. And back in early 1993, January of 1993, I decided that I didn't want to work for the consumer finance companies anymore. And somebody had told me about a wonderful opportunity about getting into the mortgage business, and decided that that was really the way to go. So I left the consumer finance industry and on a search for where to land myself, since I really had no direct mortgage experience. I landed myself with Household Mortgage out of Rockville, under a great mentor, Bobby Taylor, and went and began my career in the Washington County market primarily, and then branching out to Frederick. And after about a year and a half, June of 1994, I left Household Mortgage and went to MNC Mortgage, which at the time was a spinoff of Maryland National Bank, Maryland National Mortgage Corporation. So that's where the story begins, back in '94.
That's where the excitement begins.
That's where the excitement begins. Absolutely, we had a lot of fun, and I learned a lot. It started out with Maryland National Mortgage, MNC Mortgage. We were bought by First Tennessee Bank, and then FT Mortgage Companies, and then it blossomed into First Horizon Home Loans, which became a national mortgage company, and then back in 2008, September of 2008, the First Horizon Home Loans parent, which was First Tennessee Bank, decided that it was going to sell the mortgage company to MetLife Home Loans. Mm-hmm. So I had been with the same mortgage company for 17 and a half years.
Wow.
Until just this past November, when I went to work for MNET Mortgage, which incidentally, MNET Mortgage Corporation is the Maryland name for a mortgage network. Basically, I have been a top producer in the Frederick County markets for the last 17 and a half years. Back in 2002, I was the top producer for the entire Northeast region, closing just about $91 million in loans.
That's incredible.
Thank you. And in 2003, without an assistant, by myself, I closed 810 units with a record-producing $123.5 million worth of retail production.
You must have been busy.
Very busy. We really had a good time. It was working literally around the clock, 24/7. When I couldn't sleep at night, I did a lot of working in the middle of the night and got up and went to the office. And that's when interest rates were low, about the 5.25% range. And of course, at that point in time, back in the early 2000s, we thought it would never get lower than that. Well, of course, here we are today in quite a different market.
I know, quite exciting. So tell us a little bit about how being with your new company, MNET, has been a great move for you.
One of the things I found, Caressa, is that working for a large company, as MetLife Home Loans, as you can imagine, is, and well, actually was, because they are no longer in the mortgage business, you feel like you become a number. You're no longer a person. And I wanted that small company feel that gave us big company results. And one of the things I found with MNET Mortgage is the company is small enough. MNET Mortgage is a nationwide lender, and they are one of the largest retail independent mortgage companies that's headquartered in New England. One of the things that I found out is there's a major difference between retail mortgage lending and correspondent mortgage lending, as well as being a broker. One of the things I want to say is we are not a broker. We are a correspondent lender. And the difference between retail lending and correspondent lending is really very simple. A retail lender uses their own money to fund loans. A correspondent lender uses a warehouse line to fund loans.
Gotcha.
But both of them are very similar, as we basically originate loans, process loans, underwrite loans, table fund loans, close loans, all in the name of Mortgage Network. So we sell them to a warehouse line. Whereas a broker, they bring a loan in, they take the loan, they send it out for underwriting, so they have no control. I like working for a small company. It's been, like I said, 17 and a half years working for a large company, but that company has really had grown over those last 17 and a half years from small to large, as you can imagine.
Being bought out so many times.
Exactly.
And changing hands and things. Yeah, that always happens.
And I really feel that what I've been able to gain is the personal relationships that I had 17 and a half years ago. One of the things that I've seen is the ability to pick up the phone and call one of the owners, or the ability to pick up the phone and chat with the head of production, especially about this show today. We had a half-hour phone conversation last night, because he's real intimate with the radio shows and getting out there into the community, explaining the things that we have in the community and what we can do to help folks. So I really have a passion for helping people, and that has really given me the ability to make sure that we choose and take the right opportunities for people as far as the financing goes, the programs go, and the sort of things that we have to offer the community.
Yeah, well, I mean, with such a major decision, with buying a home and financing it, and even with refinancing, you definitely seem to have, fit the bill for the right person to handle any of those questions that people might have at that time. So, and your success obviously is, shows with regard to that. Okay, we're going to actually go to a break. So we're going to come back with Mark Ebinger and talk a little bit more about financing a home and refinancing. But I wanted to let everyone know that if you are not aware of this, the Source Radio Network is on Facebook. You can like us there. Just look it up, the Source Radio Network, and become a fan today. Thanks.
Tell me something good. Tell me that you love me, yeah. Tell me something good.
Buying a home? Refinancing? With over 20 years' experience, Mark Ebinger of MNET Mortgage Corp has the right loan for you. Call Mark today to lock in a historically low mortgage rate. MNET Mortgage Corp is a direct lender and the key to your financing. Call Mark Ebinger today at 301-788-0996.
Mark Ebinger, NMLS 476332, MNET Mortgage Corp, NMLS 2688, Maryland Mortgage Lender License Number 19266, an equal opportunity lender.
Hello, we are back with the RelyLocal Business Spotlight, and this is your host, Caressa Flannery. In the studio today, we have with us Mark Ebinger from MNET Mortgage Corporation in Maryland, and we were just talking a little bit about his background and the amazing success that this man has achieved in a number of years. And now with this new company, he is just killing it again, I would imagine. But Mark, we want to ask you, with the state of the economy, we've never had a market like this. I mean, interest rates are dropping. It's phenomenal. Tell us why the housing market is so different right now and why this is a great time to buy and finance a loan.
Well, Caressa, that actually comes twofold. The housing market is so different and the economy is so different. House prices are as low as they've been back to the early 2000s. So a lot of what we had and what we saw in appreciation, the bubble had burst. There's a lot of foreclosures out there. There's a lot of short sales. There are a lot of people that are underwater. And unfortunately, that provides opportunities for younger first-time buyers, second-time buyers to come into the market as the interest rates are so low. One of the things that people don't realize is that the loans of the past don't exist anymore. Right. And you actually have to qualify to purchase a home. But we are lending money. Mortgage companies are out there lending money to consumers to buy houses. It is a great time to buy. Like I said, as interest rates are low, you qualify for a little bit more house, but we lend responsibly. And that's one of the things that I want to make sure that everybody understands, because it gets back to what we call the 3 C's of lending: credit, capacity, and collateral. 5 years ago, you could walk into a mortgage office. If you could sign your name, you had a social security number, you could get a loan. Nobody really cared about where the money came from.
That could be the start of where the economy is right now, right?
That could actually be exactly where it was. And what happened was we went back to the basics. People need to qualify for the loans. So the 3 C's, credit, capacity, and collateral, are very simple. Right. You have to have good credit. Credit scores over 640 are going to get you the ability to purchase a home, but your credit scores really need to be over 740 to get the best rate out there. Capacity. You have to be able to prove on paper, with a paycheck, with tax returns, that you can truly qualify for the mortgage. Right. And collateral. You've got to have skin in the game. Yeah. There are very limited programs out there where you can actually get into a home with little or no money. However, you have to show that you have the ability to put some money down and you have a savings pattern. So we actually care about your ability to be able to repay the loan, and your having skin in the game shows that you're not going to walk away from this house down the road.
Yeah. Now, you mentioned the people who are underwater. Obviously that's an issue, nowadays that people are dealing with. But what about those who have adjustable interest rate mortgages? Is refinancing a good option for them right now? Refinancing
is definitely a good option, because those adjustable rate mortgages, while they have gone down over the last several years, will start to increase eventually. A lot of people are hearing out there on the radio that the feds are holding interest rates steady for the next several years. Well, the feds are holding the Fed funds rate steady, so they don't anticipate increasing the overnight rate that banks borrow money from each other, and that's the rate that they borrow money from each other. But eventually, once that starts to increase, your adjustable rate mortgages will increase, as well as long-term rates will increase. So if you have an adjustable rate mortgage, even though you feel that it's low right now, eventually that will go up. So now is the time to get into a low fixed rate mortgage. One of the things I will also say is, in the refinance market, a lot of lenders out there, they're getting phone calls from people, and they're not even able to return those phone calls or get to refinance customers 60, 90, 120 days out.
Wow.
Being a local, small lender that has the ability to underwrite loans and process loans locally, we actually measure our closing time from start to close in days, whereas most lenders measure that in months.
That's reassuring, for a lot of people.
We can close a loan, literally, our average last month was 39 days, which is absolutely amazing in this industry.
Yeah, that's phenomenal. Okay, so tell us a little bit about, I know that you have some programs out there for refinancing. Tell us a little bit about the programs that are available and who qualifies and who doesn't, and why a good lender that can provide the most up-to-date information for them is important.
Well, one of the things that we do first and foremost is the government programs out there are the HARP programs, which is the Home Affordability Refinance Program. That allows you to refinance your loan where you might either be underwater or you might have lost all the equity in your house, but you didn't have mortgage insurance when you originally purchased the home. These are the government programs sponsored by Fannie Mae and Freddie Mac. There's one caveat. The loan has to be owned by Fannie Mae and Freddie Mac, and the loan has to have been purchased by Fannie Mae and Freddie Mac prior to June 1st of 2009. That doesn't mean your loan must have closed by June 1st of 2009. Fannie Mae and Freddie Mac must have actually purchased the loan by then. We can determine by going to their respective websites, number one, whether your loan is owned by Fannie Mae or Freddie Mac, and number two, again, if you closed your loan prior to June 1st, if you're eligible for the HARP refinance program. Unfortunately, a lot of lenders, MetLife, First Horizon included, when we did these loans back when, they got better prices from private investors. So unfortunately, there are a lot of people out there whose loans are not Fannie and Freddie Mac. Yeah, they're not Fannie and Freddie Mac owned.
That's too bad.
Therefore, unfortunately, there's no help. So we find a lot of that today where people will call us up. They're either back to 100% of the value of their home or they're over 100%, and there's not a thing that anybody can do for them. And those are the people who get frustrated and think that because everybody else gets government help, why can't they?
Right.
That end up either stop making their payments or walk away or going into the short sale situation.
And foreclosures and things like that, just on the rise, because of all that.
Unfortunately, there's a lot of the foreclosures out there, and unfortunately, the other thing is we have another wave coming, which is good and bad. We just need to clean it out so we can start moving forward.
Right. Wow. Okay. So you mentioned to me at one point about the FHA Streamline program. So what's involved with this program and what is due to change coming up here shortly on June 11th?
Right. On June 11th, Caressa, the FHA Streamline program has always been around. This is a program that allows you to refinance your mortgage without having to get an appraisal, therefore alleviating the fact that there's the potential for the value that has dropped on the home. It's reduced paperwork. They typically, when you're going through an FHA Streamline refinance program, they do not require any income documentation at all. It is just purely based on the previous loan. And we do offer credit and non-credit qualifying scenarios. The credit qualifying scenarios are for situations where you might need to be removing another borrower or something like that. And the non-credit qualifying or the non-credit qualifying options are basically, when I say non-credit qualifying options, I mean you don't have to actually verify the income.
Okay.
And
actually, I'm going to stop you there because we're going to go to another break, and we'll pick back up with this FHA Streamline program because this might be a program that a lot of people are really interested in knowing about. But we're going to be back in a few minutes, and just want to make sure that everybody knows what the website is for WTHU. It's WTHU.org, the Source Radio Network.
Sunshine through them fiery gems for you, only for you. Our house is a very, very, very fine house with 2 cats in the yard. Life used to be so hard. Now
Home ownership is the American dream, and if you have dreamed of buying or selling your house, what better place to start than the Dream Team? Let John and Sharon Potter make your dreams come true. There is a reason why their buyers and sellers call them the Dream Team. With over 20 years of experience, John and Sharon Potter have an outstanding reputation for customer service and market knowledge. Check out their website, youramericandreamteam.com today. John and Sharon Potter are proud sponsors of the Champion Frederick Keys and members of RelyLocal Frederick.
I'll light the fire. You place the flowers in the vase that you bought today. Staring at the fire for hours.
And we're back. This is Caressa Flannery, once again, your host for the RelyLocal Business Spotlight. And I want to ask you a question. Do you guys know that every dollar you spend with a Frederick business stimulates our local economy? Interesting. So perhaps we should be spending more money with our local businesses. I am the owner here of the local RelyLocal, the RelyLocal in Frederick, and just want to make sure that everybody knows how to get to our website, because there's lots of local businesses that are portrayed on there. RelyLocal.com, and then you're going to plug in your community, and you can fish around on that site. There's tons of different local businesses. There are local coupons, local jobs, and events in the community, and we would appreciate you becoming a fan as well on Facebook. But we are back with Mark Ebinger from MNET Mortgage Corporation in Maryland. And before we did the last break, we were talking about the FHA Streamline program. So why don't you just back up a little bit, reiterate a little bit more about that program, and continue forward with how great it is and what's happening starting on June 11th.
Sure thing. The program, as it was, one of the things that we've seen over the last 2 years is FHA has increasingly increased their monthly and their upfront MIP, mortgage insurance premiums. And what that has done is, for the people who had purchased homes prior to June of 2009, the monthly mortgage insurance premium was quite a bit smaller than it is today. So they went back and they did the same thing with HUD as they did with Fannie Mae and Freddie Mac, and they said, okay, for any loan that is an FHA loan that was endorsed by HUD on or before May 31st of 2009, and only lenders can determine that. It's not the day your loan was closed. It's the date that your loan was endorsed by HUD. They are going to reduce the monthly mortgage insurance premium and the upfront premium, therefore making it attractive for folks who have FHA loans to refinance those loans without their monthly premium going up. One of the things we found is, for example, if you have a $300,000 mortgage and your mortgage insurance was $150 a month under the old program, if you refinanced today, your mortgage insurance would be over $300 a month.
Wow.
More than just about doubling. Mm-hmm. Well, if you go from a 5% interest rate to a 3.75 interest rate, the reduction in your monthly payment is going to literally be eaten up by the increase in your mortgage insurance payment. Mm-hmm. So this new program, which is effective June 11th, takes the upfront mortgage insurance premium from 1.75, which it is currently for new loans, and reduces it to 0.01. Again, as long as your loan was endorsed by HUD prior to May 31st of 2009. So the mortgage insurance premium up front is literally zero.
Wow.
The monthly mortgage insurance premium will be 0.55% of the actual base loan amount annualized. So, which is exactly what it was prior to May 31st of 2009. So you're going to keep your mortgage insurance premium the same. Therefore, now you have the ability to take care of or take advantage of the interest rate environment as to where FHA loans are today with the streamlined refinance, whereas unfortunately over the last year or so, we've been having to tell clients that they can't take advantage of it or it doesn't make sense. The unfortunate part about this is there are folks who have refinanced in the last 2 years to the FHA program under the guidelines that they were.
Right.
And unfortunately, this won't help them because they've already closed their loan, and their loan had been endorsed post 5/31 of 2009.
Yes, but this will make a lot of people happy, I would imagine.
It should really open up the door. I mean, I feel the floodgates will open up June 11th, so we all need to be prepared for the phone calls and the refinance phone calls. And
that's really awesome. Well, with people who are downsizing, because of this crazy economy and this market, I would imagine there are people who are still buying the condos out there. And what sort of information should they be aware of if they are buying a condo as it pertains to the purchase in Frederick County?
Caressa, one of the things that we found is Fannie Mae, Freddie Mac, the largest buyers of mortgages, HUD, they have always had issues, and I don't want to say issues, but they've always had their concerns about condominiums because they go up and down in value, and they're a lot, they call riskier. Plus a lot of people who own condos and they put them into investment properties. So one of the things that they've done over the last couple of years is HUD primarily has come out and they have staggered expiration date of FHA condo approvals. Now, all property management companies should have been aware of this when it came out. There were major announcements by HUD that were sent out to all the lenders, that were sent out to all property managers, companies who manage the condo associations, and they were told of these new guidelines. All that needed to happen was they needed to get their condominiums recertified, which include people need to be paying their condo association dues on time. People need to have a 10% reserve in their budget. And there are certain things that HUD requires. When the condominium has expired, then we have a problem because it takes sometimes 2 to 3 months to get that condominium recertified. Therefore, you can't get financing. So condominium owners need to look out and make sure that their condo association is recertifying their condo.
Wow. Yeah, I guess they do need to check into that. That's a critical thing.
That is a very critical thing if you're trying to sell a condominium.
Exactly. Wow. Well, it sounds like with all the success that you've had and just the amazing customer service that I'm sure that you provide, I know that hooking up with a mortgage lender when you're about to buy a home or even refinance is a personal decision. So obviously building relationships with people is super, super important. And you wouldn't be as successful as you've been, without having done that all these years. And, obviously you're good at what you do. That shows for sure. And I can tell also that you care about what you do and you care about people and you want to make sure that you work really hard to get them, into the home that they've looked so hard for and whatnot.
That's always been my goal is to help people achieve their dream, and that's the American dream of home ownership, and that's really important to me, to give people the best service, the quality service, and to put them in the right home, the right loan that suits their needs, and not just put them into something that they wish they want.
Yeah, definitely. Now, we're getting ready to wrap up here, but why don't you tell us how people can get in touch with you, all the different ways that they can get in touch with you, and, let them know, so you can let them know about all these wonderful programs that are out there right now so they can purchase a home or refinance a current loan that they have or an existing loan.
Well, first and foremost, the easiest way to reach me is on my cell phone. And that number is 301-788-0996. Again, that's 301-788-0996. I also have a personal website, and it's www.markebinger.com. Again, that's www.markebinger.com. There's a lot of neat information on our website, a lot of testimonials, a lot of places you can go.
And you're on Facebook.
I'm on Facebook. I'm on LinkedIn. I'm on Twitter.
Yeah. You got to get with the social media, right?
That's one of the things that I've never really been, Facebook always, but with the LinkedIn and the Twitter. So it's been really nice. And again, my cell phone is the easiest way to get a hold of me. I'm always available.
Anytime.
Anytime. My wife used to have that tagline, call anytime.
Call anytime. Yeah. So, well, Mark, it's been a pleasure to talk to you today about all things mortgage. So we really, really appreciate you coming out today and talking with us about all that. But anyway, we're done with this show today. We want you to stay tuned for the next program. It's the Bobby Likas Car Clinic, sponsored by a RelyLocal member, Roddy Creek Automotive. This is Caressa Flannery with the RelyLocal Business Spotlight. Thanks for listening.
Taking care of business and working overtime.